13th, 2019. And my name is Alejandro Zambrano. I'm the chief editor at investingcube.com, and I'm also the global chief market strategist of the broker ATFX. I'm based in London, where we've been doing these market updates and these webinars for a few years now. I started to do them already when I was working for the website Daily FX, and I was actually working for Daily FX and FXCM from 2009 to 2016. Now, we just had some UK data out, so we're going to take a look at that. Consumer Price Index. So we're going to talk a bit of the euro, of course, a bit about the stock markets, which are turning around. The German DAX is down with about 1%, as we just on the day. So there's definitely some movements today. You can see here, Aussie stock market is down with 1.5 or 1.15%. So definitely a bit of volatility. New Zealand dollar is up almost 4% as well. So we're going to talk a bit about all of that. Before we start, as always, I need to stress the trading financial markets, unfortunately, is high risk, and we may lose all of our invested money. As well, do stay in touch with me. You can always follow me on AlexFX00. That's my Twitter. So you can check that out. And as well, we have the Investing Cube handle, which is the following, investing cube.com. As well, you should definitely make sure you subscribe to the ATFX YouTube channel as well. In the chat box today, we have Antonio Jimenez. How you doing, sir? Hope you're doing great. Thanks so much for joining me. If anybody else wants to join, just say hello here in the chat box. It's very straightforward. You just need to create an account with YouTube. That allows you to subscribe to videos, like videos, comment on videos, and join chats like this one here. Tori's telling me the EBEX is breaking 3 weeks of consolidation lower due to the left government. Yes, in Spain they had elections, and I didn't read up on it too much, to be honest, but I do understand there's no single majority. So we're going to take a look at the markets, and let's kick off with the GBP versus the USD. So the GBP versus the USD is slightly upwards right now. So exactly 10 minutes ago, so at 9:30, you can see we have this movement in the price, and the price is up right now about 22 pips. The reason for that, what that is causing this to actually turn a bit more volatile, is the consumer price index. So you have core consumer price index, which was 1.7% annually versus 1.7% in the prior month and 1.7% expected. So that's pretty much spot on. Then you have headline inflation, and the actual outcome was 1.5% versus a forecasted outcome of 1.6, and lower than the 1.7 in the prior reading. So what's happening is that headline inflation is moderating. As well, the Bank of England told us at their latest rate meeting that inflation will come down. And if inflation comes down too much, it might actually lead to a rate cut. And some people are talking about a rate cut by the Bank of England maybe early next year. So we have the election in December, and then maybe a rate cut after that. And that rate cut or the change in the stance of the Bank of England already caused a bit of pound weakness. But mostly what's dominating the pound here, as you know, is just headlines about Brexit. The last move here was on the news that the Brexit party will not compete with Tories, the Conservatives, in where they won at the last election. But they will still be challenging Labour and Lib Dem in their strongholds. The problem with that strategy, though, is that both the Conservatives and the Brexit party are sort of saying the same message. They want to have a Brexit, which means that if they actually compete in these things, some people are going to vote for the Brexit party and some other people are going to vote for Tories, which means that they will share their votes. And there's also going to be a challenge, of course, between Labour and Lib Dems. And there's going to be some sharing there as well. But what could happen is that if they go head to head in some of these, if they would stand back, all these shares, all these votes could maybe go just to Tories or maybe just to the Brexit party. And they would get a good setup. It's the same thing that Lib Dem and some of the other smaller parties did, where they decided to sort of back off from each other's constituents to make sure that they can get a majority. Now, looking at this today, technically, there's not a lot of things happening. It's actually been quite boring for quite some long time here. And technically, there's not a big change. The market remains bearish in this little zone. Of course, selling down here, which we talked about a few weeks ago and days ago, it's not necessarily the most optimal. Ideally, one sells a little bit higher, maybe from this little spot up here, which is the actual spot is the 28.58 level, and then try to target lower levels. That could be something. As you know, the Euro USD is already bearish. It took out support here a few days ago, and it did go down, but the GBP USD has refused to follow down lower. So again, I think it might swing up a bit, but again, as long as you're below 129.33, it's probably going to go lower. And because it's just stubbornly high up here, I will be a bit cautious, to be honest. I wouldn't get too heavily involved in this. I've been bearish already from here, and it just doesn't really want to go lower. So when something doesn't want to go lower, it's going to try to go higher. Euro USD, this one worked out fine. With the break, the market went lower. I still think we're going to go down to 109 and lower for the rest of the year. But this is not an optimal spot to sell. If we go up to 110.78, that's a better spot. Then you got the 111.40, which is a good spot here as well. Dollar versus the Japanese yen is under pressure today. And the reason for that is because stock markets are going down. So I've been saying that we had the breakout because we have that massive inverse head and shoulders, and that is trying to go, but that is not, fortunately, not working out because this market did not catch up with stock markets. And then you had the alternative, which was to buy the dip, and we're back at that level to buy the dip. We can still have the little push to the upside. We're going to look at stock markets in a few minutes. But the outcome of this depends very much on what happens with stocks. The trend will continue to be bullish about 108.61. If we take this out, it might go down a little bit, but it's not going to be a major reversal or major decline. At least I don't think so. Well, we at it. Let's talk about stocks. So this is the stock market. This is the S&P 500. The market hasn't done too much since November 4th when the market rose all the way up here. And I've been insisting that we want to buy dips, and I'm continuing to insist on that. So let it go down to maybe 3,047.5, and then maybe from here turn bullish. As for the German DAX, it's coming down with 1%, but can still go down quite a bit more. If you look at this from a bigger picture perspective, you have a big head, left and right shoulder. You got the break here. That gives you this target here, which is a target which is beyond the all-time high. We're actually not that far away from the current all-time high. Just 3.32%. We also have that January 28th high, which is limiting price and could stop it from trading much higher. And you can see here people giving up, but clearly there must have been some news here that caused this to go down. Let's actually check that out. Seems to be quite widespread reason for the slide. You can see here Deutsche Bank down with 3.31%. That the volume here is really high. Well, not really high, but it's high. 5.68 million. Then you get Continental is down with 3, but you can see the amounts here slightly less. So it seems to be quite broad-based slide here. In the components that makes up the DAX index. That would tell me a bit more that maybe the move lower is more to the fact that you're having a bit of profit taking. Let's actually check out Deutsche Bank. Good question. Which exchange? So this is the Deutsche Bank price. This is delayed with 15 minutes. It's not real-time data here. I mean, but looking at this price, it's just going down. It's within some sort of a triangle or some diamond pattern maybe, or triangle. Let's call it a triangle. So it's not necessarily, you know, the beginning of a massive slide. It's not necessarily what happened here when the market traded below the low here in May and effectively triggered a descending triangle. Um, so it's not that situation. So effectively, I guess, you know, maybe Deutsche Bank is bearish today, but it's not necessarily the beginning of a massive decline. To do that, we probably need to trade below this level down here. And that we can start to get a bit worried, but then you have a ton of other levels here that could support price. So again, German DAX probably for now at least a technical correction, not necessarily a major trend reversal. There are other chart analysis that does suggest that we can go lower. And today I'm gonna be nice and show you those charts as well. So this is the an Andrews pitchfork dating data from 2019. And you can see we pretty much went all the way up here. So it does indicate a bit of a reversal, and then you got that RSI. So from that perspective, longer term swing traders might be getting involved. But for now, I'm gonna continue to target these highs here, and I'd rather give this a bit of a chance. I'm gonna lower the buy area a little bit like that, but pretty much between 12,970 and 12,979. It wouldn't surprise me if we try to bottom out. As for the crude oil prices, they're going down a bit. I think they are definitely influenced a bit about stocks. This market continues to be in a bit of a sideways pattern like this, with a bit of support down here and this here. This I don't know why, but it should be slightly lower like that. You have this upward sloping trend line, and it's just mirroring pretty much what we're doing with stocks. So I think if we can go down to these levels and then potentially after that turn bullish from here pretty much. So that's what I would do. At that point, of course, or most likely the RSI will be at the bottom. Finally, gold prices going up. They're going down quite strongly. You're seeing that little rotation. People buy gold, people sell stock markets. So you're having that push. Technically, we go up to 1473, 1480. I think people are gonna sell. That makes sense. You just need to pay attention to this. If this goes aggressively higher and the stock market is going down, then that will be a bit of a warning sign. I wouldn't be jumping and selling on this immediately. But if the S&P, maybe the DAX starts to reach levels where people want to buy them, and this is a good spot where people want to sell it, then that's obviously something to pay attention to. Okay, we covered all of the main markets. Let's see if you guys have any questions. So Antonio was talking about the IBX. Let's take a look at the IBX. I haven't actually seen that. So this is the daily chart. You got a massive head and shoulders here. You had a lot of markets that showing very interesting patterns. So obviously this market is coming down quite a lot. And I think in the long run, I will continue to be a bit bearish. Oh, sorry, bullish. Call it bullish. I have been bearish for some time, but that narrative has not really been working, has it? I'm talking about the macro fundamentals. I read it's an interesting report. Let's see if I can find him. This guy over here. This guy works for a bank, like an asset manager in Sweden, and it's like a short-term, sort of long-term equity sort of type of guy. And I haven't really been following him for too long, So I wouldn't be able to vouch for him, but I know the bank. They've been around for a long, long time. And these guys have been overweight risk since January of last year. Now, these are not traders. They sort of allocate more to shares and more to, it's like you want to do more bonds, so you want to do more shares. So this longer term stuff. And apparently they had some very good numbers. Obviously, he put this report out, and it's quite typical. You know, when things are really bad, and you put a report out, which is against the trend, you wouldn't necessarily tell that to everyone. Maybe he did do that, but I would need to go back all the way to January and check. But what is interesting, he put this statement out and this report out saying that, look, we've been getting it really right. And obviously the market is about to turn around at that same time. So that's the same thing as well. People will say victory, you know, and be very happy about things when we're at the highs. The same way when the markets are down a lot, you're gonna see all these bearish traders that have been bearish that right now they're very, very quiet. But then as soon as the market goes down on Twitter, they're gonna all say, look, I told you so. So it's a bit the same here. But the key point is this. He claims he's been right since this year, and he continues to be optimistic about the future. So it's always good to go with the guys that have been right. So I'll send you this link if you want to check it out. It's third-party stuff. It's not my stuff. So you can check it out if you want to. Not responsible for the content, but it can be interesting to give you a little bit of a different view. And what he's telling you is that he thinks that the world economy will continue to improve, and he thinks all these ISMs and everything will continue to go up higher. And effectively, that supports more bullish stock markets. And the stock markets in overall are bullish. I mean, if you look at this, which is the S&P 500, you have this ascending triangle pattern, which is up here. But we obviously moved up quite a lot from the lows, pretty much up here. So that's an 8.47 times return. So obviously it can go down to the median line, maybe worst case a little bit lower. But if he's right, this other guy, about the long-term view, then any sort of strong dips will be used to be buying. Anyway, I'll send you that PowerPoint presentation that they produced. You can check it out if you're interested. Okay, we don't have any more questions. We're going to wrap things up. If you have anything else for me, please let me know. And you can reach out to me. My handle is Alejandro Zambrano. Oh, my name is Alejandro Zambrano. The handle is AlexFX00. Please make sure you follow me. If you have any questions, you're most welcome to reach out to me. Have a great day, guys, and I'll see you guys in the next few days. Antonio, have a great day, and thanks so much for your questions. Thank you, and bye-bye.